All right, so on the ET Money Show, we make sure that we don't just talk about investing in mutual funds, but also help you meet the brain behind these funds. And in this week's Meet Your Fund Manager segment, we have on board Ihab Dalwai, Fund Manager, ICICI Prudential Multi-Asset Fund. Let's take the discussion forward with Ihab. Good evening and welcome to the show. And we're going to talk about multi-asset allocation funds. And just to start off the discussion, I wanted to understand what is this category all about, which is in vogue these days?
Yeah, hi. So broadly, what has happened is that investors generally tend to avoid or tend to not focus too much on the asset allocation aspect when it comes to their investment journey. So what this category or the fund actually does is the multi-asset fund is that we try to help the investor in taking decisions in terms of the asset allocation. And the approach which we adopt is a dynamic asset allocation approach. In this category, we don't believe in a static allocation. Because what we have seen historically is that different asset classes perform differently in different phases of the market. So there are times when equities tend to do well, there are times when debt tends to do well, and there are times when commodity tends to do well. So our job as fund manager while managing this fund is to identify where are we in the cycle for each of these asset classes and make appropriate investments and allocate capital to each of these asset classes.
So, as we all know, the diversification should be followed as a rule on a portfolio level. And this is a type of fund that provides you that kind of asset allocation diversification that an investor needs. Now, if one is already well diversified on a portfolio level, do you think a fund like a multi-asset allocation can serve a purpose in terms of gaining them return, beat the volatility, and also give inflation-adjusted returns?
So what the fund tries to do is that we internally have a dedicated team looking after each of these asset classes. We try to identify which asset class is expected to do well going ahead. And mind you, on a risk-adjusted basis, the performance which the fund has delivered is superior because it tries to minimize the risk. It tries to take advantage of the volatility as well. The fund is structured in a manner in which it tries to harness the advantage or tries to harness opportunity through the volatility which equities sees, and through a dynamic asset allocation, we try to benefit and try to generate returns out of that.
So, Ihab, tell me something. This is a hybrid category of a fund. So far, we've seen, like in 2022 and 2023 also, as is expected, the markets are expected to be very volatile. For someone who just wants to begin their investment journey, is this the kind of fund that you would recommend? Because they don't really have a core portfolio so far. But then if you want to enter the investment circle, this can be the first fund?
Yes, absolutely. So I agree to your point out here because see, just to give us some journey of how this fund has gone about in terms of its equity allocation as well. So during COVID, we knew that valuations were lower. We were in an early stage of a business cycle. So the equity allocation to this fund was higher. But over the last, I would say 1 year, what has happened is that the policy rates have gone up. So debt also as an asset class looks attractive now. So we've reduced equity allocation and we increased allocation to debt. So for an investor who's looking to enter into equities or is looking to enter into as a first step towards investing into equities, I think this is an ideal category or a fund for someone of that sort to invest in. Because the volatility part is taken care because we at our end would look to switch in case a particular asset class on a relative basis becomes attractive or becomes less attractive. So that responsibility is, or that action is taken from our end. So for an investor, need not worry of that, of the fact that is he continuing to be invested in an asset class which has done well, because we would look to switch away from that asset class and try to find an asset class which is expected to do well going ahead.
All right, let's talk about the ICICI Pru Multi-Asset Fund. Now, equity, debt, and which is the third category that, or the other categories where you have diversified as per this theme?
So apart from equity and debt, there's an option of investing in commodities. So predominantly where we're invested currently is precious commodities or precious metals, and that is gold and silver. And apart from that, this fund can also invest in certain REITs and InvIT. So we have a small exposure to that category as well. But it's predominantly gold and silver in the other commodity or the other asset classes currently.
So tell me one thing now, as the market changes its movements, this fund also changes the allocation. Is that how it works among, within the asset classes?
Yes, that's true. Because, like I mentioned earlier, it's a dynamic approach. We don't believe in having a static approach or a fixed allocation to each of these asset classes because the performance of each asset class keeps changing over a period of time. So, accordingly, we try to calibrate our allocation to each of these asset classes. So, like I mentioned earlier, that during COVID times, equities was very attractive. So, we had a higher allocation to equities. But as policy rates have also gone up on the debt side, we've slightly reduced equity and we've increased allocation to debt return instruments in the current portfolio. And similarly, gold also, which had come off over the last 1 year, but we increased our allocation to gold also based on a last published or based on the monthly published portfolio, one can figure out. So as a result of which, we do keep analyzing which asset class one needs to invest in, and it's a very active allocation or calibration which we keep doing.
So what is happening is Ihab, a lot of AMCs have launched multi-asset allocation funds. A lot of them are still in pipeline. What would be that thumb rule or a guideline for an investor to choose the best multi-asset allocation fund for them? Because as the name goes, it provides you diversification across asset classes. So maybe the role of a fund manager becomes very important, in terms of their timing and in terms of how they are switching across asset classes. But for an investor's point of view, how can you identify the right kind of multi-asset allocation fund for you?
So, like you mentioned, that one has to understand how the fund manager goes about allocating capital to each of these asset classes over a period of time. So I strongly feel history is important if someone wants to select, because it's only then you can analyze and try to figure out whether the fund manager has done a good job or has done the right job in terms of reallocating capital from one asset class to the other. Because mind you, the investor can do these allocations, like you mentioned earlier, on his own basis. So if we as fund managers are trying to bring an additional edge or trying to generate alpha through asset allocation, the investor has to figure out and has to see the historical performance and has to analyze whether the fund manager has done a good job in terms of switching capital from one asset class to the other.
Just one thing, what will be the tax treatment for these kind of funds?
So it's a equity fund. So at a gross level, it's maintained above 65%. But on a net basis, it can come lower through certain hedging strategies. But it continues to be an equity fund. For us, at least, for ICICI Prudential Mutual Fund, it continues to be an equity.
The strategy as far as equity is concerned, what are the sectors that you're banking on and you've picked up?
So broadly, when we go about managing the equity portion, at least for this fund, I adopt a counter-cyclical approach. So we try to identify stocks, sectors, or segments of the market which are currently out of favor, but the medium to long-term story or outlook for the sector or the stock is intact. So adopting that approach, historically, we've had a higher allocation to PSUs, which is worked. But going ahead, I think pharma is one sector which I think fits into this framework. Autos is another sector which fits into this framework. And within autos, especially two-wheelers. So these are the two, I would say, a counter-cyclical approach, which I think should do well going ahead.
Tell us something about REITs and InvITs. This is the kind of investment instrument that people aren't really aware of and have not really taken off in the country. Specific sort of investments as investment instrument products, if I talk about. But having it as a part of a multi-asset allocation fund, how does it help an investor diversify and also have exposure in categories where a traditional way of investment could be of a very higher ticket price?
Exactly. So I feel I'm quite positive on these instruments, primarily because what it helps the developer do it removes the burden on a developer of a project, be it a real estate or an infrastructure project, of holding on to this asset, because it helps him churn out capital better. It gets into financial investors into the asset class, so that the developer can redeploy capital into creating more assets. So I think it's a very good instrument, and from an investor's perspective, from a financial investor's perspective, it helps the owner of the instrument get a long dated instrument where the asset is completed. The financial investor doesn't have to worry much about execution risk, and it's more of an yield enhancing or an yield accruing instrument currently. And when a good sponsor is associated with the instrument, there are certain visibility of further assets being added to the product as well. So there is a bit of a growth element associated with as well. So it is a kind of yield plus growth factors which one can build into these asset classes, and I feel it's a very good instrument. And we've not seen many of them come on board currently, but I think I think it would evolve and grow as a category.
What's your outlook on gold and the precious metals that you invested into as per the fund?
So what we've seen is that historically there's a very strong correlation between real rates in US and how gold performs. So when real rates from a positive territory come into a negative territory, that is partially linked to how treasuries in US function. Gold tends to do well. So that's the view. What we have taken is that ultimately, eventually, real rates in US will come off from the positive territory to a negative or a neutral territory. I think that's when gold would do well, and that's why we build a position in gold as well.
Talking about the entire market trajectory in 2023, how volatile do you think it will be, and how are you going to juggle between all the asset classes? I mean, considering the fact that debt or fixed income instrument has to be a part of your portfolio, do you see the allocation going higher that ways in the later part of the year?
So, see, what has happened in equities as a market, at least, is that valuations are slightly on the higher side from what we've seen on an average basis historically. And from a business cycle perspective, also, we are almost in the process or almost through a recovery phase of the cycle as well. So, from both these aspects, equity is not as attractive as what debt would be, because debt has seen a sharp increase in the policy rates as well. But having said that, if one looks at large caps in equities, the sentiments are slightly negative, and from sentiments, I mean the outflows which we are seeing from FIs as well. So, having putting a counter-cyclical thought to that, I think that large caps look attractive because it's seen good selling from FIs as well. So, from an equity perspective, we are more aligned to large caps versus mid and small caps. And like I mentioned earlier, that we've reduced allocation to equity and have increased allocation to debt. But to your point on volatility as well, as I mentioned earlier, these funds are devised in a way that it can take benefit out of volatility, as it can shift from one asset class to the other as well. And by also using few very low risk derivative strategies as well, which help in yield enhancing as well.
All right, so that's all about multi-asset allocation funds and ICICI Pro multi-asset allocation funds. We've gone into details and understood the asset allocation strategies adopted by the fund manager. Thank you so much, Ihab, for being on the show and explaining our viewers and taking them through to this category.
Thank you.